Apple is one of the largest companies in the world. They have a very dedicated fan base and a large share buyback program in order to still provide values for the shareholders, even for such a big company where it can be hard to grow further. Today we want to look at two different cases and evaluate whether or not buying Apple at today's price could be worth your money. So let's look at the numbers. They made a revenue of over $400 billion in the last year, with a net income of $112 billion, which gives them a profit margin of around 27%, which is very good considering that they mainly sell hardware, but they're also expanding very heavily into their software subscriptions. So this profit margin still has potential to go up further still. They are currently selling for $248 per share, which gives them a somewhat high PE of 32. For full disclosure, I already own a long position in Apple, but I bought at a very different price way back, so don't let that distract you. Let's look at a bear case first. So assuming that the company is so large that it becomes very hard to grow, that the competition also rises further and further, that they fall back in the AI race and so on. So I think a revenue growth of 2% is still somewhat good for them. That would still increase their revenue by 10% over the next 5 years, roughly. And so even for a bear case, I think 2% is still very good for a company of this size. And I would keep the profit margin the same, considering for this case that just, their customers are very loyal. So I don't think that it's too shaky here. And they always had a share buyback going. So I think a share decrease is to be expected. And I would still give them a somewhat high P of 22, because the company of Apple, as long as they keep growing somewhat consistently, I don't see their PE dropping anytime soon. They are a premium company and they deserve a premium price. In this case, the stock price would go to $238 in the next 5 years. And if bought at today's price, that would be roughly a 0% gain, of course. But now let's look at a bull case in comparison. For a bull case, I assume a revenue growth of 6%. That would be pretty high revenue growth. That would increase the revenue by over 30% in the next 5 years, which is very good considering a company of this size. And for the bull case, I would assume that their profit margin goes up even further if they're able to push out even more subscriptions, maybe get in more revenue through AI services if they can get them up and running. And an even bigger share buyback of, about a reduction of further 8%. And of course, an higher PE of 26. I think if Apple grows at 6% annual rate, I think they deserve an even higher PE. So let's go with 28 here. That would take the stock price to $480. And if bought at today's price, that would be a 14% return. So already looking better. But in order to get the full picture, let's combine these two cases into an average. The average stock price of these two cases would be around $360 with a roughly return of 7.68% on an annual basis. So the company does look a bit pricey right now. They are trading for a P of 32 right now after all. So they are a bit expensive. So it becomes a bit difficult to justify buying Apple at today's price. Of course, you have to make your own assumptions, and maybe you think that they are worth the P of 32 right now and that they can reach those numbers of a bull case or maybe even higher. But for me right now, the average case seems a bit too low of a potential return in order to justify a buy. So I will continue to hold Apple and potentially wait if the stock price will drop down further into the future. And if not, I will just continue to hold. But let me know what you guys think down in the comments, and I will see you in the next one.